Well, the 2010 budget was all about productivity, innovation. So the minister proposed the Productivity and Innovation Credit. I call it PIC for short. And for PIC, the credit, in fact, it is an allowance, will be for the following activities: research and development, design, IP acquisition, IP registration, automation, and training. Now, I will look at some of these in detail, but basically what happens in PIC is that for the first 300,000 of expenses, these will qualify for 250% deduction. In other words, if we spend 100,000 on each or on one of those qualifying activities, we get 250% deduction. And that is actually very attractive. Up until now, the maximum deduction we get is a double deduction. And usually the double deduction is by approval on approved projects. Whereas now it becomes an automatic process. So it is actually a very, very welcome proposal. And we should take advantage of this. So the first 300,000 will qualify for 250% deduction, and excess over that will be the normal 100% deduction. However, for R&D activities, it will still qualify for 150% deduction. The PIC is effective initially for 5 years, 2011 to 2015. So it will be basis period ending on or after 2010. In other words, if we make up accounts to 31st March 2010, we are already able to claim PIC. The PIC also has a cash conversion element. In other words, instead of claiming a deduction, we can convert the deduction into cash. So when the government gives you something, look at it in greater detail. Because the government is going to give you 21,000. So you may want to ask, why is it 7%? Well, the 7% is actually computed by looking at a normal company. For a normal company, the first 300,000 attracts the partial exemption. For a new company that has at least one shareholder who is an individual holding at least 10% shares, the new company attracts a 100,000 deduction on the first 100,000 chargeable income. So if we look at the net chargeable income after the partial exemption, we are really looking at tax of 25,750, 17,000. Effective tax rate of around 8%, effective tax rate of about 5.6%. So when you average the two, it comes down to around 21,000, hence the 7% conversion. Now, IRAS has indicated that you can make an election to convert on an annual basis. So before we convert, we must be mindful about our profitability. So project forwards, because your conversion will be after the financial year. So you probably have made up the budget for the coming financial year. Look at your profitability. If you are going to turn in profit in excess of 300,000, do not do a conversion. Because if your profits are more than 300,000, any excess over 300,000 is worth 17%. Because these profits will be taxable at 17%, but instead, if you convert it to cash, you only get 7%. So you are actually short by 10%. I would only suggest companies to do a conversion if in the short to medium term, you do not see yourself turning profitable. For example, we need to do a lot of R&D before we break even and turn profitable. Then, only in those situations should we want to consider a cash conversion. So the cash conversion, as I indicated earlier on, made on an annual basis. So you can make it in year 1, don't make in year 2, and make in year 3. And you can make it after your financial year, but before the submission of your Form C. So normally we would submit a Form C if you are very efficient by 31st July. Otherwise, you ask for extension, submit it by 30th November. So between year end and the time you submit your annual return. And for companies making up accounts to 31st March, you actually can submit your application a lot earlier on. Now, other implications of PIC. First, there will be a removal of research and development allowance. The research and development allowance was introduced in last year's budget, effective from YA09. Okay, so first year of claim is YA09. So what the proposal for PIC means is that R&D allowance will be frozen after 2010. In other words, you could have claimed 2 years of R&D allowance. So that will be frozen. It will no longer be available for 5 years as initially proposed in last year's budget. Because in last year's budget, the minister proposed R&D allowance to be effective for 5 years from YA09 to YA13. But you have 2 years of R&D allowance. This is frozen, but can be used up to YA16. So those of you who have claimed and will be claiming for YA10, you have up to YA16 to use up the R&D allowance. But just a reminder, the R&D allowance will be available only if you have incremental R&D spending. Incremental R&D will be R&D expenditures in excess of what we spend in YA08. So if in YA08 we have nothing for R&D, then everything that you spend will be incremental. Then they are doing away with RISE as well. RISE is a research and development incentive for startup enterprises. For those startup enterprises, because they needed cash flow, so for R&D activities that they undertake, they could have converted it into cash. So with the cash conversion element coming in PIC, RISE is also taken away. Currently, for research and development, we can deduct our expenditure under Section 14 or 14D. So Section 14 will be when we incur the expenses wholly and exclusively in the production of income. But most of my clients, the difficulty is it's very difficult to convince IRAs that our R&D actually gave rise to income. Hence, the introduction of Section 14D. So Section 14D basically says if you do R&D related to your business, you can claim R&D deductions. Last year, the minister introduced a liberalization of R&D spending such that any R&D that we do will qualify, need not be related to our business. What I tell my client, if you do GEPO R&D, in other words, R&D not related to your business, you can still get deduction. The only requirement is you must have a 10(1) source. So as long as we have income from trade, business, profession, or vocation, we can claim Section 14D. And in an effort to make R&D prevailing in our corporate sector, the minister also then introduced an additional